Welcome to Accruals Accounting, brought to you by Parkbench Tutors. In this short podcast, we are going to look at entries for accruals. We can have accrued revenues and accrued expenses. An accrued revenue represents revenue that's been earned but not yet recorded. An accrued expense is a liability and it's recorded since the expense has been incurred. If we don't make the adjustments, then for accrued revenues, the revenue would be understated if we didn't make an entry, and with the expenses would be understated if we didn't make these adjusting entries. So let's have some examples. Black Gold Fuels has supplied $25,000 of fuel to Red Riding Air Transport, and that's in May, but it hasn't yet generated the invoice. Nevertheless, it has in fact earned the revenue in May, so it should be recorded in the accounts at the end of the month. So to make that record, we debit accounts receivable with $25,000 and we credit revenues with $25,000 to record the earned revenue, and that's our adjustment for the accrual. Crocus Patent Attorneys carry out work for Santorini Pharmaceuticals. It's a service company now, and at the end of June they have work completed for service revenues which they estimated $14,000. So again, they need to record it in June because that was when the revenue was earned. So to make that record, what they do in the accounts is to debit accounts receivable with $14,000 and they will credit the service revenues with $14,000. So the asset of accounts receivable is increased by $14,000 and the revenues have increased by $14,000 as well. Now, how do we record the payment when it's received? Well, that's fairly straightforward. The payment received in July would then be entered into the account by debiting cash with $14,000, and of course accounts receivable would be credited with the $14,000. Accrued expenses are common for companies where you supply a service but you only generate the invoices either at the start of the following month or sometimes during the following quarter. Now, a company may well wish to record any accrued expenses, particularly if the amount is significant. Well, what's significant? That depends on the company. So for an energy bill of say $15,000, that would probably be considered significant for nearly all companies. Whereas on the other hand, if you know that you owe the gas station $20 or $30, that might not be worth considering recording for a large company. Let's suppose, for example, that a telephone bill is received once a quarter and it's usually in the region of $2,400. Well, probably at the end of each month you'd probably want to record the accrual for $800. Now, as an example, at the end of August, Atlas Cycling estimates an accrual for $2,000 for energy supplied by Volt Solar. So we need to be recording this, and remember it says at the end of August. So the expense has been incurred during August, so the entry should then be made in August. So how do we make that adjustment for the accrual? We debit the electricity expense account with $2,000 and we credit an accrued expenses, an accruals account with $2,000. Another example, Waterloo Furnishings has a note payable for $18,000 taken out on May the 1st, due on July the 31st, and the interest rate on this note payable is at 10% per annum. Now, we're not going to be concerned with the initial entry for the note payable, which would obviously be recorded when the note was taken out on May the 1st. What we're interested in is what happens at the end of May, because at the end of May we'll want to calculate how much interest has accrued, because we owe that, and we need to record this in the accounts as accrued interest. So let's do that little calculation. Interest due on $18,000 at 10% per annum. Well, in 1 year that's $1,800. So if I divide that by 12 to get $150, that represents the interest per month. So at the end of May, the interest expense account should be debited with $150 and the accruals account and accrued interest account should be credited with $150. And there we are, there's our entry, a debit of $150 to the interest expense and a credit to accrued interest of $150. Here's another example where we may well have accruals where wages are paid, and the wages are actually paid at the start of the following month. And this is particularly important, of course, for companies where wages are paid according to hours worked with different rates for overtime, and that information, which usually comes from time cards, may not actually be available before the end of the month. So we still need to make an entry for how much that we owe for wages and salaries. So let's say Waterloo Furnishing has accrued wages and salaries expense of $48,000 at the end of June, but the payments are made to the employees on July the 5th. Well, because those expenses occurred in June, we must make the entry for June. So on June the 30th, we're going to record the accrual. So what we're going to do is debit the wages and salaries for June with $48,000, and we'll credit an accruals account called wages and salaries payable with $48,000. That ends our simple podcast with examples for accruals, brought to you by Parkbench Tutors, narrated by David Hopcroft. Thank you for watching and for listening.